meantime, however, let's get you the big market opinion coming in from Mark Mobius, what he thinks about large caps, mid caps, small caps, where is he putting money to work, all of that coming up right now.
Right now, large cap are more attractive. In the past, the mid cap was more attractive to us, but now large cap is where we want to be. The emphasis for us now would be on raw materials. But sure, Reliance and these other big stocks look quite good, particularly in view of the fact that they're going to be benefiting from this incredible growth in India. So generally speaking, those large caps with strong balance sheets will do fine.
Abhijit Roy, Managing Director and CEO of Berger Paints joins us now. Abhijit, good morning. Thank you for joining us. Now, margins for the quarter gone by were subdued, but volume growth was decent. Is this largely because of what's happening in the market in terms of a new player coming in and that new player is cutting prices?
No, actually, morning, Nikunj. So far, no major impact as far as the new player is concerned. They're just now placing their machines across different counters. So it will take time for the things to stabilize for them and create some impact. As of now, that's got nothing to do with that. The volume growth were pretty decent at about 11.8%. So no great concern on that front. The value growth was muted because we had a price decrease, last 2 quarters of about 5%. And then more of economy products we sold and less sort of, the luxury products. So the combination of these two, resulted in a value growth which was muted. I think some of it will get corrected in Q2 itself. And going forward, it looks fine.
So, hi Abhijit, this is Anisha also joining in the conversation. So, a lot of factors change in the product mix, the fact that the price hikes were delayed. But talk to me about Q2, how things are looking up in the quarter and the price hikes that you have taken. Are they enough or will there be some more in the offering?
So Q2, we have taken 2 price increases and the third one got taken today actually. We closed it today from 12th of August, the third one became effective. So overall 3 price increases have been taken. The total is about 2.5%. I think as of now it covers the sort of pricing is that has happened in the raw material prices, and there will be a slight increment from there. I don't think there is any major need for price increases unless the raw material prices again start moving upwards.
Right. Morning, Mr. Roy. Wanted to discuss your margins as well because they were a bit subdued in the first quarter, despite the fact that volume growth has been steady. What is the outlook now from Q2? Are we going to see a recovery with the price hikes, or is it still going to take time for your margins to recover?
So the margin, in the first quarter was about 17.2%. If you see, normal guidance is between 15 to 17%. We did reasonably well in the first quarter as well. Typically, we will be hovering around this point. Slight improvement will happen because of the price increases that we have taken now. But the issue is that last year in the first quarter, the margins were very high on the back of very low raw material prices. It had shot up to about 18.9%. Normally, we are not at those levels. If you see, that was the highest in the last 10 or 12 quarters, I would say. So as a result of that, it is looking as if there is a marginal degrowth in the margin, but as a margin percentage to sales, it was reasonably good and it will improve in the quarter two.
Okay, it will improve in Q2 because of the price hikes that you have taken. But your market share has also managed to inch up because your volume growth was strong, as you pointed out. The market share is closer to 21%. How do you see it trending, let's say, by the end of the year?
So I think we should be able to hold on to these levels. Typically our first quarter market share is on the higher side because we sell more in the first quarter compared to the industry at large. So it tends to move slightly, upwards in the first quarter itself. But it stabilizes, as we progress through the year. So we will be in that 20 to 21% range in terms of margin. Last year we had closed at 19.7. So it's an improvement. Every year we tend to increase it by about 0.5 to 0.6%. We expect that to happen this year as well.
Market picture between 20 to 21% is what you're expecting, but volume growth, as you talked about, 11.8%. Now, given the fact that H2 is expected to be better, there has been good monsoon as well, election and other uncertainties, and that heat wave and everything is over, what could be the exit rate when it comes to the volume, let's say in H2? What kind of numbers should we expect? High teens, 15 to 18?
So by the end of the year, I think, definitely we will be double-digit growth rate in terms of volumes. Where it will be probably be, 2%, 2.5% higher in the second half, possibly from current levels, so that's what we are looking at. And that's the objective, to take it to those levels, because I think the industry also is likely to do better in the second half compared to the first half.
Okay.
So, sorry, just to clarify that point, when you say it's going to be 2 to 2.5% percentage points better, so right now if it's 12%, you're expecting
Yeah.
it will be between 14 to 15%, correct?
That is right. That is
Sure.
right.
Okay. You don't expect any price war, right? Because you would imagine that the incumbent players would face the heat of the challenger here. I mean, I understand that either there is a channel discount which is there, or there is a discount in terms of, of free quantity. You don't
Yeah.
see price war intensifying at all.
So no, so Nikunj, two things happened. They had started, as you were mentioning, about the one major player who has come in. They started giving 10% free, and the prices were lower by about 5 to 6% compared to the industry leader. Compared to us, they were very comparable. So we are not therefore bothered about that 5 to 6%, because we are always 4 to 5% lower than the industry leader as well. So comparatively, they are at similar levels. As far as the free item or free goods that they were giving, possibly did not have enough traction on the ground. So now they have withdrawn. In the last 10, 12 days that we have heard from some markets, at least, confirmed news that this is not available anymore. So I do not know whether this has been formally withdrawn or not, but it seems to be that, this is not gaining anything for them in the marketplace.
And final question, if crude prices stay where they are, which is just below $80, then on a blended basis for this quarter, could there be a price cut or could there be a price through?
As of now, I don't think, see, we don't, normally Nikunj don't respond, immediately to, because this keeps fluctuating, every month the prices go up and down, there is no surety whether this trend line will hold or not. If this goes on for 3, 4 months, then we will take a different decision. But as of now, there is no need to change anything.
Abhijit, appreciate your time and so glad you could join us. Markets.
If you like this video, then like, share and subscribe to ET Now.